All right, good evening, everyone. It's Tim Davis coming to you guys with a midweek market review. Today is Wednesday, March 22nd, 2023. And today was the Fed rate decision day. And if you guys were watching the market, you saw what happened. You saw what transpired after the Fed made their rate decision and after the Fed had their commentary right afterwards. All right, I'm going to do this real quick, or try to anyway. Let's start off with the VIX. So after the Fed meeting today, let's take a look at the VIX very carefully. This is a daily chart. I want to point out a couple things. So here's our candle for the day. Throughout the day, sometime during the day, you saw this long wick form. At one point, this is a full body red candle with the bears pushing this price action down. And all of a sudden, as we close towards the end of the day, the VIX fought back. At the end of the day, this is how the market ended. This is a hammer candlestick pattern, folks. At the end of a downtrend, normally if we get some type of, especially if we get a green bullish hammer candlestick, that's normally one of the most bullish candlesticks after a downtrend that there is. This is a sign of a reversal, possible reversible. So with that hammer candlestick pattern showing at the end of a downtrend, we can start to see, and look where it's hitting at. Look where it hit at, right at the 50-period moving average, 50-day moving average. We're possibly going to start to see the VIX march right back up, folks, and maybe right back up in a massive way. So pay close attention to that as we go through the rest of these last 2 days of this week. Got a bullish hammer pattern here right at the end of a downtrend on the VIX. You can start to see the VIX go right back up and maybe back up in a major way. That's what the VIX is showing us. Let's go straight to the NASDAQ. All right, here is our daily chart of the NASDAQ. Just pretty much almost the opposite of what you're seeing in the VIX. The bulls push price up, bears push price right back down. We got this long wick at the top here. And this candle pretty much almost totally engulfs the previous one. So there's a lot of pressure on the bears here. I mean, there's a lot of pressure on the bulls in this market. And if I was to go to let me show you guys what the QQQ is showing, which is one that also tracks the NASDAQ. Look at the where price action stopped on the Qs, right at a level of resistance. This is a long-term level of resistance that I have been following for quite some time. Let me switch this to a weekly chart. So this is a long-term level of resistance that I've been tracking from the 408 high. And every time we have gotten close to that level, markets found a way to reverse and pull back. So I'm looking for some of the same to happen. And look at that pattern up here, right at that level of resistance, and started to pull right back. So with that said, I do believe that the NASDAQ has finally run into a strong area of resistance and possibly about to reverse, maybe in a meaningful way. Look at that price action is sitting right on the weekly chart. Price action and the NASDAQ is sitting right on that 50-period moving average, right at that 200-day moving average. And it looks like we are possibly going to be possibly break back below that. We have to see what happens as we travel through the rest of this week. But that is a strong bearish candle on the daily chart. So with the oscillators also in the Williams percentage starting to point down, full stochastics pointing down, RSI all pointing to the downside. So we could see some follow-throughs tomorrow. We got to see what happens. Take a look at our S&P. Look at that, folks. S&P right up to its 50-period moving average, got a huge rejection. Now price action is pushing on that 200-day moving average. And if I was to pull up the SPY, which is the ETF that tracks the S&P, and you'll see this price action pushing down just below that 200-day moving average on higher volume, just a little bit higher volume. And you see the same thing, oscillators and the Williams percentage starting to point down. Stochastic starting to point down, RSI started to point downward. So it would not surprise me to see some follow through tomorrow. If we get that follow through, confirmation follow through, then we can start to see a big reversal to the downside, and possibly run to test the lows that we saw back in the early part of March. Oscillators, Williams percentage pointing downward, full stochastics pointing downward, RSI pointing downward. Let's switch right to so we did the NASDAQ, switch to the Dow Jones. If I haven't done that one yet. Here's the Dow. Again, I'm not sure if I've done this already, but we'll do it again. Dow, again, pushing right back below that 200-day moving average. Tried to break above the 20-period and the 200-day. Bears push price action right back down. And now look at the oscillators and the Williams percentage pointing downward. Both the stochastics pointing downward, RSI also pointing downward, which leads me to believe that there could be some follow through this downward move and this downward pressure tomorrow. Got to see what happens. And we look at the DIA, which is the ETF that tracks Dow. Look at that strong movement back below that 200-day moving average. All right, now let's look at the Russell, RUT. Here's a look at our Russell. Of course, it's been trading below its 200-day moving average for a while now. And look at that. It looks like it's ready to go lower again already. Oscillators in the Williams percentage pointing downward. Of course, the stochastic still pointing downward, even though it's an oversold territory. RSI pointing downward as well. If I was looking at a weekly chart of Russell, I'm sure how weak this has been. This Russell's just been extremely weak. Weekly chart has been extremely weak. This sell-off has just been strong over the past couple of weeks within the Russell. Every time we get a rally, it pulls right back. And if we look at the ETF that tracks the Russell, which is the IWM, there we go. We have the 20-period moving average, like it's about ready to cross back below the 200-day with a strong red candle on a day and on increased volume. So anytime you have a downward pressure on increased volume, that's telling us that the bears are still very motivated. All right, so that's all our indices, folks, and that is a look at our VIX. So again, the bears are starting to really sink their teeth into this market. Looks like if we have some follow through tomorrow, folks, we can start to see some more steep selling in a major way. Let me draw your attention to gold. So folks have been following me with gold. I told you that gold has been in this upward trending trading channel. Pulled back from that 2014 high that we seen a couple of days ago, but we're still overall hanging right in this upward trending channel. So I do suspect that gold will stay in this upward trending channel. Any pullbacks in gold will probably be muted, and we'll probably continue to see a move to the upside. Gold is still trading nicely above 1900. So as long as we stay within this channel and continue this upward trajectory, we should start to see gold really start to push above 2000 and stay above there in the near future. So gold, I think, has a very, very good setup for continuation to the upside over the next several weeks or months. Let's take a look at silver. Same scenario. Here's a weekly chart of silver. It's starting to push up continuously. Right now, it's pressing just above its 200. Just above its 20-period moving average on a weekly. And if you look at a daily chart on silver, pushing nicely and holding above its 50-day moving average as it continues to go higher. I think the longer-term aspect of gold and silver, folks, is very, very bright. So that could be a bright spot if you're looking for some type of bullish activity. And one more we'll look at is crude. And crude is still stuck below some major moving averages. Even though it's back above 70, crude oil is back above 70. We have to see how it handles itself right at this level of resistance that it's at. Look at a weekly chart of crude. You'll see it is trying to get a bounce off of that 200-day moving average. So we got to see if we get some follow through with that and see if the crude continues up to the upside. All right, folks. So that's all I have for you guys for this weekend, for this midweek market review. I'll catch up with you guys sometime this weekend to do a overall end of week analysis of what transpired throughout this week and what we can possibly expect as we continue to go through this bear market. So next time, Tim Davis signing off. Enjoy your night and enjoy the rest of the trading week until I catch you guys on the weekend.